Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Akila Kristina binti Muhammad Khalil. My matrix number is 25004-212. Today I'll be talking about a very interesting topic, which is the Islamic and conventional banking system. In our daily lives, banking plays a huge role. Why? This is because banking is the business of protecting money for others. Bank lends money, generating interest that creates profit for the bank and its customers. A bank is a financial institution licensed to accept deposits and make loans, but they may also perform other financial services. The term bank can refer to many different types of financial institutions, including bank and trust companies, savings, and also loan association. Why we use a bank in the first place? This is because banks provide security. Banks will protect your cash from theft and natural disasters like flood and fires. Secondly, convenience, because banks will allow you to access your money when you need it. They can also provide one-stop shopping or for financial needs, from investment to home and auto loans, along with other financial services. Last but not least, banks also offer many services that can help you grow your wealth. Do you know that there are actually 5 main types of bank in Malaysia? The first bank is conventional bank. This bank is operate on interest-based system. For example, Maybank and CIMB Bank. Secondly, it is Islamic Bank. This bank operate based on Sharia principle. For example, Bank Islam and also Bank Rakyat. Furthermore, investment banks. These banks will provide corporate financial services. For example, CIMB investment banks, Maybank is investment banks, and also RHB investment bank. Lastly, foreign banks. This bank is actually a international banks that operate branches or subsidiaries in Malaysia, like HSBC and Standard Chartered Bank. Last but not least, development financial institutions. This bank was established by the government to support specific sectors like agriculture, SMEs, and education. For example, SME Bank and also Agro Bank. However, I'm going to talk only two types of bank in Malaysia today, which is the conventional banking system and Islamic banking system. Do you know what is Islamic banking system? Islamic banking system is a financial system that adheres to the principles of Sharia law. Islamic banking prohibits the use of interest, speculation, and excessive risk. It emphasizes profit and loss sharing, fairness, honesty, and transparency in financial dealings. Islamic banking or Islamic finance strives to remove harm from financial transactions. Both Muslim and non-Muslim can also participate in Islamic banking and also get benefit from its principles. Islamic finance has grown tremendously since it first emerged in the 1970s. Current global Islamic financial assets and assets under management have reached USD 2.88 trillion with annual growth of 14% at December 2019. There are over 1,500 Islamic financial institutions worldwide across 80 countries. According to the Asian Banker Research Group, the world's 100 largest Islamic banks have set an average asset growth rate of 13%.
Now, let's move to the Islamic bank principles. The first one is prohibition of riba. Riba means interest. The bank will earning money from money without any economic activity. In the Quran, Allah stated in Surah Al-Baqarah, "A'udzubillahi minasyaitonirrajim wa ahallallahu al-bai'a wa harrama riba." That means Allah has permitted trade and forbidden riba. So that means Islam strictly forbids riba, and whoever did this will get punishment hereafter. Again, Allah said in Surah Al-Baqarah, "A'udzu billahi minasyaitonir rajim, fa in lam taf'alu fa'adhanu biharbin minallahi wa rasulih." Meaning that if you do not give up riba, then we warn of a war from Allah and His Messenger. The second one is profit and loss sharing. In Islamic banking system, they will encourage risk sharing between the bank and the customer. Both parties share profits and losses based on agreed ratios. Next, there are also prohibit of gharar and maisir in the banking system. Gharar means excessive uncertainty or deception in contracts. For example, selling something that doesn't exist or unclear terms. On the other hand, maisir means gambling or speculation. In Islam, they forbid earning profit through pure chance or betting. Furthermore, asset, which is back financing. Islamic finance must be linked to real economic activities and not just money trading. In Islamic banking, they can only invest in halal, which is permissible businesses. Sectors like alcohol, pork, adult entertainment, and any unethical activities are prohibited. Lastly, the goal of Islamic finance is not just profit, but economic justice and community welfare. They encourage their customers to do zakat, wakaf, and financial inclusion. This will ensure wealth is not concentrated among a few people.
Now, let's move to the conventional banking system. This bank is the one most people are familiar with. This bank also represents an unethical and profit-oriented system. The main purpose of conventional banking is to make money, which is mostly produced through the interest. Moreover, I'm going to talk about products that conventional and Islamic bank offers to people. In conventional finance, products are usually based on interest and lending, but in Islamic finance, all products must follow Sharia principles, which do not allow interest or unfair gains. For example, a conventional savings account earns interest, but in Islamic finance, a saving account is based on profit sharing between the customer and the bank. Next, loans in conventional banks charge interest. In Islamic finance, loans are replaced with contracts like murabaha, where the bank buys something and sells it to the customer at a known profit.
For leasing, conventional banks rent out assets for interest. In Islamic finance, it's called ijara, where the bank leases the asset to the customer but the ownership stays with the bank. Bonds in conventional finance give interest income, while Islamic finance uses sukuk, which are bonds backed by real assets and share profits instead of interest.
Finally, for insurance, conventional insurance involves uncertainty and interest, whereas Islamic finance uses takaful, which is based on mutual cooperation. The participants can contribute to a shared fund to help each other.
In conventional banking, the financier gives money as an interest-bearing loan, regardless of how the money is used. However, the Islamic banking purchases the commodity which the client requires, such as house or car. Based off profit, conventional banking charges interest on capital, and the interest depends on time value, whereas Islamic banking profits are earned through goods and services. Time value of money: the conventional loan amount keeps on increasing with the passage of time, while selling price in Islamic finance, once agreed, remains fixed. Deficit financing: in conventional banking, the expanded money and the money market is without the backing of real assets, and it results in deficit financing. On the other hand, Islamic banking balanced budget is the outcome of no expansion money. Sharing in loss is when a lender suffers losses in conventional type it is not shared by the bank, whereas Islamic banks as an investment partner.
Now, let's look at how Islamic and conventional banking actually work in real life. Both systems exist side by side in Malaysia, and they offer many of the same services like saving accounts, loans, and investments, but the way they operate is very different. For example, if you want to buy a car, a conventional bank would simply give you a car loan and you have to pay back the loan amount plus interest every month. But in Islamic bank, there is no interest involved. The bank uses murabahah or cost plus sale contract, meaning that the bank buys the car first, then sells it to you at a higher price, which includes their profit. You pay in installments and both sides know exactly how much profit is made. The same idea applies to house financing. A conventional bank charges interest on the home loan, but an Islamic bank uses a concept called musyarakah buntana kisah, where the bank and the customer share ownership of the house. Over time, you gradually buy the bank's share until you become the full owner. Globally, Islamic banking is also growing fast, not only in the Middle East but also in countries like UK, Indonesia, and Singapore, seen as an ethical and stable financial system based on fairness and real economic value. In conclusion, both Islamic and conventional banking systems play important roles in our economy, but they differ greatly in principles and objectives. I think that's it from my video. Thank you for watching and listening. I hope you gained something from this presentation.